Most people think billionaires invest using secret formulas, complicated hedge funds, or connections the average person could never access. But if you study how many of them actually built their fortunes, something strange appears. Some of the world's richest investors follow tactics that look completely wrong. They ignore market news when everyone else is panicking. They sometimes invest most of their money into just a few ideas. And in some cases, they make millions by doing absolutely nothing for years. At first glance, these strategies seem bizarre, but behind them is a mindset that quietly built some of the largest fortunes on Earth. So today we're breaking down 7 weird billionaire investing tactics that ordinary people can actually use. And the first one might be the most counterintuitive of all. Because according to several billionaire investors, the most powerful investing move is sometimes doing nothing at all. Imagine investing in a company and then ignoring the stock price for the next 10 years. For most people, that sounds impossible. The average investor checks their portfolio constantly, sometimes multiple times a day. But many billionaire investors do the opposite. They buy great businesses and then leave them alone. One of the most famous examples comes from legendary investor Warren Buffett. He once joked that his favorite holding period is forever. Instead of constantly trading stocks, he buys companies he believes will grow for decades. Then he waits and waits and waits. This strange patience has allowed compounding to do something incredible. $1 invested decades ago can quietly grow into hundreds, or even thousands, over time. But here's the part most people miss. Frequent trading often destroys returns. Transaction costs pile up, emotions take over, and investors panic during market dips. Billionaires avoid this trap by simply refusing to react. They understand something most people don't. The real money in investing isn't made in the buying or selling, it's made in the waiting. But patience alone isn't their only strange move, because the next tactic involves doing something that feels completely terrifying, buying when everyone else is running away. Market crashes create chaos. Headlines scream about economic disaster. Investors rush to sell everything. Fear spreads faster than facts. And this is exactly when many billionaire investors start paying close attention. Because when panic hits the market, prices often fall far below the true value of companies. That's when opportunity appears. During major financial downturns, some of the biggest fortunes were quietly built. When the crowd was selling in fear, a few investors were buying. It sounds easy in theory, but emotionally, it feels almost impossible. When markets are collapsing, every instinct tells you to run. Yet billionaire investors train themselves to think differently. Instead of asking, "Why is everything crashing?" they ask a different question. Which great businesses are suddenly on sale? This contrarian mindset is uncomfortable, sometimes even controversial. But history has shown something interesting. Some of the greatest investment opportunities appear during the moments when the world seems most uncertain. But spotting those opportunities requires something many investors don't have: information, and that leads to the next strange habit billionaires share. They spend massive amounts of time reading. If you walked into the office of certain billionaire investors expecting chaos, flashing stock tickers, and frantic trading, you might be surprised, because what you'd often see instead is someone quietly reading reports, company filings, industry research, economic data. Some investors spend hours every day absorbing information. In fact, Warren Buffett has said he used to read hundreds of pages daily during his early career. Not because he had to, but because knowledge compounds the same way money does. Each new piece of information adds to an expanding mental library. Over time, this creates a powerful advantage. Patterns become easier to recognize. Business models become easier to evaluate. And investment opportunities become easier to spot. Most people try to move fast in markets, but billionaire investors often move slowly. They study first, they think deeply. Then, when the right opportunity appears, they act with confidence. But when they do act, another unusual tactic sometimes appears. Instead of spreading their money everywhere, they sometimes focus it into just a few ideas. One of the most common investing rules you hear is simple: diversify, spread your money across many investments to reduce risk. And for most people, this is solid advice. But some billionaire investors follow a different philosophy. Instead of owning dozens of investments, they concentrate their money into a small number of businesses they deeply understand. This strategy is often called high-conviction investing. The idea is simple. If you truly believe a company has enormous long-term potential, spreading your money across dozens of other investments might dilute your returns. Instead, they focus on their best ideas. Of course, this approach requires extreme research and discipline because concentration increases both potential rewards and potential mistakes. It's not reckless gambling, it's calculated confidence built from deep knowledge. And when these bets succeed, the results can be extraordinary. But billionaires don't just think differently about how they invest, they also think differently about how they use their money, because some of them rarely sell their investments at all. Instead, they use a surprising strategy. Borrowing against their wealth, most investors assume the only way to access money from investments is to sell them. But some ultra-wealthy individuals do something very different. Instead of selling their assets, they borrow against them. Here's how it works. Imagine owning millions of dollars in stocks or business shares. Instead of selling those assets and triggering taxes, investors sometimes use them as collateral for loans. Banks are often willing to lend against large, stable holdings. This allows investors to access cash while still holding their investments. Their assets continue growing, their ownership stays intact, and in some cases, it may create significant tax advantages. Of course, this strategy is complex and carries risks, but it reveals something fascinating about how billionaires think. They see money not just as something to spend, but as something to structure. Every dollar becomes part of a larger financial system designed to keep wealth growing. And sometimes that system expands even further, because many billionaire investors turn businesses themselves into investing machines. Some billionaires don't just invest their personal money, they build businesses that generate enormous cash flow. Then they use that cash to acquire other companies, assets, or investments. This process creates a powerful cycle. A business produces profits. Those profits fund new investments. Those investments generate even more profits. Over time, the system grows larger and more powerful. This strategy is often called capital allocation, and some of the greatest fortunes in history were built this way. Instead of relying on a single investment, they created entire networks of assets constantly feeding growth. But behind every tactic we've discussed, there's one principle that matters more than anything else: time. Because the final tactic billionaire investors rely on isn't flashy. It isn't complicated, but it might be the most powerful advantage of all. In modern markets, everyone seems obsessed with speed, quick profits, short-term trades, instant results. But many billionaire investors play a completely different game. They think in decades, not months, not weeks, decades. They understand that compounding becomes incredibly powerful over long periods. A small investment growing steadily year after year can eventually reach extraordinary levels. But only if time is allowed to do its work. And this is where most people struggle. Waiting is uncomfortable. Progress feels slow at first. But over time, something remarkable happens. Growth accelerates. Momentum builds, and what once looked like small gains begins to transform into serious wealth. It's not magic, it's mathematics, combined with patience, and once you understand this long-term mindset, the strange investing habits of billionaires suddenly start to make sense. At first glance, billionaire investing tactics can look strange. Doing nothing for years, buying during market panic, spending hours reading, concentrating investments, borrowing against assets, building systems that reinvest profits, and thinking in decades instead of months. To the average investor, these moves can feel counterintuitive, sometimes even uncomfortable. But behind them lies a powerful principle. Wealth often grows from discipline, patience, and thinking differently from the crowd. The biggest irony: many of these strategies are available to almost anyone, yet most people ignore them. Not because they're impossible, but because they seem too simple to work. And that might be the strangest investing secret of all.